Hey guys, Omar Khan here from Theta Trading, and today we're going to be talking about Alphabet's earnings, or parent company's Alphabet, Google's earnings, traditionally known as Google. All right. Now, before we do that, if you guys could consider hitting that like button, we're trying to get as many likes as we possibly can. It helps the YouTube algorithm. If you like our content, consider subscribing to the channel and let us know what sort of videos you'd like to see in the future. Now, let's get into Google's earnings. And first of all, why are Google's earnings even important? Well, they're going to tell us a few things about what's happening, not only with Google, but with the economy. So first step for us always at Theta is to invest in companies that we believe in long-term, okay? Now, for us, that happens to be Alphabet or Google. Doesn't necessarily mean that's the case for you. You've got to do your homework. This is the process of doing the homework. So now, let's get into earnings. It says Alphabet misses on earnings and revenue for second quarter. That doesn't sound good at all. You're like, oh, wait a second. You missed on the earnings, which means you didn't make as much money as you thought, and you didn't sell as much stuff as you thought. Revenue's short. So you're missing the top line, which is revenue, and the bottom line, which is earnings. That is not a good thing. But let's take a look at Google stock price over the last year, okay? So over the last year, the stock price was up as high as about $152. Now it's down to about $112 a share. So a lot of this bad news has already been built into the stock price. The stock market is a forward-looking mechanism. It's pricing in today what it thinks is going to happen in 12 months. So it's thinking, well, Google's fairly priced at 112. Now the stock market is definitely not always right, and that's where the opportunity comes in, okay? So you can see it's had a major decline for the first half year. But now if we zoom out to a 5-year picture, wow. 5 years ago, this stock was only at $46.97. And again, this is why we invest in high quality companies. So that even if our timing is wrong, we can expect the share price to increase over a period of time because of the amount of money the company makes. That is done in the earnings call. Okay, so now let's jump into the earnings. All right, so we can see here, earnings weren't too great. As we saw here, Alphabet recorded earnings per share of $1.21 versus $1.28 expected. Okay, so a lot of this has to do with what Wall Street thinks is expecting. Wall Street expected $1.28. That is bottom line. They said, we only did $1.21. What are you gonna do, right? Revenue. Wall Street expected $69.9 billion. They only did $69.69 billion. So a little bit lower there as well. YouTube advertising revenue also down, right? $7.34 billion versus $7.52 billion the year earlier, as per expectation. Okay, now this is the one I really want to look at, cloud revenue. Okay, now they did $6.28 billion. That is a good number, but analysts expected $6.41 billion. Now, if you add all that stuff up, that'll give us our number plus what they did in Google. And I'm about to get into that. So revenue growth slowed, and also let's take a look at this traffic acquisition cost. That means how much they had to pay to get that traffic to their different sites like YouTube and Google. They paid $12.2 billion to $1 billion versus the $2.41 billion the street has expected. Okay, so now revenue growth slowed to 13% from the fourth quarter versus 62% a year earlier. Now the reason it was a lot more a year earlier is because once the pandemic hit, everyone flocked to YouTube and the internet for cloud services, and they're Googling stuff. And that revenue increased substantially during the times we were locked down and we're in our homes. Now that we can get out of the house and do stuff again, you can see revenue is starting to slow down. It's only 13%. And that's why we've had a bit of an issue with the stock price so far this year. That, along with inflation concerns, slowing consumer demand, all those things that you've been hearing about in the news, recession, blah, blah, blah. What matters, though, is this. This is what we're going to look at, okay? This is the truth indicator. Everything else, quite frankly, is a bunch of bullshit, right? Whatever the media says, their job, remember, is to scare you, is to terrify you, to give you the most misleading headlines and to induce the most fear so that you look at what they're trying to sell, which is ads, okay? Now, our job is to sift through that and actually look at the evidence. This is the evidence, okay? Revenue growth slowed to 13% from 62% a year earlier. Still pretty good, okay? Now, we know that a lot of US-based companies are experiencing currency fluctuations. That means the US dollar, okay, is growing. It is getting more stronger. And when your dollar is stronger, it requires more of the other currency that you're making money in for each dollar that you're bringing back. So this actually, currency fluctuations from strengthening dollar knocked 3.7% off of revenue growth. That's substantial, okay? When you're only growing at 13% a year, I should say only, but you're growing at 13% a year, Well, 3.7% being knocked off, that's a big amount, okay? So you said economic outlook, and that's one of the things we want to look at, uncertainty in the global economic environment, okay? So we're starting to see that inflation is still very high. You're starting to see it, you see it at gas stations, grocery stores, et cetera, all the items we buy each and every day. So it's a lot of uncertainty right now. Interest rates are going up. Home prices are being affected by that. All that stuff is going to cause an impact. So for example, if you're running a business, are you going to spend as much money on advertising on YouTube or on Google as you were previously? Maybe not. And that's what we're trying to really look at here. But they have so many different segments of their business. And when we invest in a company, we look at companies which have various segments of their business. This is one of them. Advertising revenue increased just 12% to 56.3 billion as a tough environment that it was. Most notable deceleration was in YouTube division, where sales rose 5% after jumping 84% the year earlier. Now, we talked about why that is. The reason for that is because we're not going on YouTube as much because we're able to get out of the house, and there's been a lot of pent-up demand to do things, to live, right? All right, so let's take a look at total advertising revenue for Google. You can see here, it had peaked at 61.2 billion a couple quarters ago, last quarter 54.7 billion, and this quarter 56.3 billion. So Google ad revenue, again, because we're spending less time online, that has decreased, but you can clearly see a trend, okay? You can clearly see a trend. The trend is definitely in the right direction, okay? Now, what we really want to see is their cloud division. That is the one that's really the one that I'm most excited about for the future for them. Google Cloud, which fell short of revenue expectations, lost 858 million during the quarter. The cloud division is trying to take share away from Amazon Web Services and Microsoft Azure. So Amazon is number one, Microsoft is number two, Google is number three. Azure Cloud Services grew by 40% in the period, okay? Now, Alphabet also increased their headcount. They have now 174,000 full-time employees, and that costs money from 144,000 a year earlier, okay? So they're definitely doing the right things. Revenue is growing, the different divisions of their business are growing, but let's take a closer look, okay? So we can see here, this is the first quarter. This is where we got that 69.69 billion number from. Changes in revenue year over year. You can see the year before, revenue really shot up, and that's why maybe the stock price shot up a little bit higher than expected. But operating income hasn't changed a whole lot, right? Operating margin went down a little bit. Now, again, what we're looking for is what I want to see is this cloud, okay? You can see the Google Cloud last quarter. So we'll go to the first one here, Google Search and other, okay? For the first 6 months last year, it did 35.8 billion. This year, 40.7 billion. Ads are up a little bit, but not as much as the last quarter. Google Network, okay? And we can see here, other, that's a big number, 6.5 billion, but this is the one that I'm most interested in. This grew from 4.63 billion to 6.3 billion, not as robust as the growth with Microsoft. But what I'm really going to be looking for is, are they taking more and more market share away from Amazon Web Services and from Microsoft Azure? If they're going to be taking more and more services, because this area, think about everything that you do on the internet. It's all housed on a cloud somewhere, and someone's making a lot of money from that. Microsoft and Amazon have the 2 and 1 spots. Amazon being 1, Microsoft being 2. These guys are number 3. Now we know that they have Google ad revenue, we have YouTube ad revenue, but this is the one that I'm most excited about. If they can continue growing this in the future, we would expect revenues and earnings to increase substantially, and that is what we're going to be looking at. Now that we've gone over earnings, now let's take a look at how exactly do we do with this? What information do we have now? Now we think, okay, I showed you a 1-year chart here on Alphabet, Google, okay? Now we think, again, based upon the way they're growing, all that stuff, we're comfortable, we've done our homework, we think that company will be worth more in the future. Now that's not stock advice, don't take it as such. It is simply our homework. We have said to ourselves, hey, it's worth 112 now, we think it'll be worth 140, 150, 130 in the future. So we're happy to buy it for 112 today. That is what we think in our heads, okay? But instead of using the stock market, so we could just buy this at 112 today, and you can see it's up $6.72 today as of July 27th. And I'm going to go to the 5-day chart here and show you, again, just after earnings, the stock did not do well until the earnings called. Then it really racked up. It went all the way down to about $103, $102 after earnings, because you saw that first thing. Oh, they missed their earnings. They missed their revenue. Oh, bad report card, right? But what they said was afterwards in the earnings call is some pretty good stuff. And what I'm going to be looking at is how they're doing in the cloud division, like I said. So we have a couple of choices. We can buy this for $112 today, but that is not what we do here at Theta. What we do instead is we enter the options market. And using the options market, we are going to guarantee a buy price. So we're going to go to August 19th. Today is July 27th. We are going to guarantee a buy price on this particular stock. We're going to say to ourselves, you know what? No matter what price it goes to, we are going to guarantee a price. Now, sorry, I apologize about the scrolling, but what price do we want to buy it for? Okay, it's trading at $112 right now. If, for example, we agreed to buy it for $110 a share, okay, that means we're guaranteeing a buy price of $110. Not saying that, we're saying that no matter if it goes to 109 or 108 or 107, it doesn't matter. We're going to guarantee it at 110. For the next 3 weeks, we're being paid $2.60 a share. That's about a 2.5% return. So think of that. We have two choices. We can buy Google for $112 in the open market today, or we can guarantee a buy price of $110. I know it sounds kind of weird, but we get paid a lot of money just for guaranteeing a buy price. And the reason we don't mind guaranteeing that buy price is because we would have paid $112 for it anyways. But if we can pay $110 a share and get paid $2.60, that's what we do each and every day here at Theta. If you like this video, guys, please, like I said, hit that like button, consider subscribing. Let us know what content you want to share, see in the future. Omar Khan here from Theta Trading, and we'll see you next time.